500 here, and we've been looking at the market working across the medium level here, 1650, and we're also looking at this particular move down through here at this stage as an ABC correction. However, if this move comes down too far through here, then we need to be looking at this larger correction through here, and the wave 4 38% retracement level comes in around the 1560 here, but the wave 4 1 less degree is down through here. So our normal stance is that the 1650, the medium level, is the line in the sand. So while it's under that, we have a bearish bias on it. If it had support on the 1650, then we would take a bullish bias on that. So the market is still working through this particular level here. So yes, we can take guesses at what it's going to be, but at the end of the day, we need to wait for it to mature, and that takes patience. And once we understand it as support or resistance, then we can increase our trade size from that point of view there. Just drilling into that somewhat here, the move down from here is being treated as an A and a B wave and a C wave through here as a corrective wave to the downside. Now we're looking at this moving up through here as wave 1, and then we're looking at this moving back here as wave 2 with this 61.8 retracement level coming in. Well, look, there's a gap on the cash market around the 1620. 425 maybe, but the 1617 here, well, I had it down to 1616, but as a 61.8 retracement level there, so that's where it can come to, and it's come that quite low so far. So we're looking at this being an A and a B and a C wave into here, and then further upside. So if that pans out, we can allow it to come down to the 1620, but if the 1620 becomes the resistance in here, then we've got a problem. First of all, the 1620 is part of group 1, which is on top of 1600. The 10, 20 and 30 is all group 1, and we know that if the 20 becomes the retested resistance, then we'll be looking for further downside. So that's our little line in the sand on the sub levels. If all goes according to plan, the market will stay above the 1620 and then move higher through here. Now, as I've mentioned before, there is a bit of a problem with the A, the B, and the C wave down through here, and that is that in the C wave here, and it's on the cash as well, the wave 1, 2, 3, 4, and 5 here counts quite nicely. However, the wave 4 here moves up into the price territory of wave 1 coming down. So it really puts a bit of spanner in the works there. So that would actually make this move down through here a wave 1 in terms of a diagonal triangle as a wave 1. So we need to be mindful that we could still have that in play, and the 1620 as a retested resistance would help support that further downside. The upside here counts quite nicely as a 5-wave structure here. I've got that counted as wave 1, but it can also be wave 2, but it would only be wave 2 in terms of this being an A wave up here, this being a B wave here, and then a C wave up through to here, giving this an A and a B and a C wave here. Now, if that's the case, then we'll see a further downside through here. So look, there's still a lot of guessing of what this can be as it moves across the 1650. So we've got the first leg down, but we've still got too many possibilities on the table. So we just need to be a little bit sort of patient on this one. And this is obviously the same for the US 30 as well, but this is how we've been counting this up through here. There is a little gap in the cash market around here that's not covered just yet. So we're looking at that there. So as this stands at the moment, this move down through from, I should have that in brackets there, but doesn't really matter, from 1 to 2, 61.8. This move down through here can be counted as an ABC down through here. So that could stay there as an ABC. And this could also be up for 1 here and back for 2 here. Okay, so intraday traders looking for support to trade long would use the 1630, the top of subgroup 1, finding support. So that's something that you can look for at that point there. But yeah, so I'll leave that at that. Yeah, that's just on the 2-minute chart there. So we want to regaining support on the 1630 there. If you can, 1633, which takes it into a micro level scenario there, because that would also be group 1 as well, 1, 2 and 3, even though this is 10, 20 and 30, 1, 2 and 3 there, support on that. So look, taking those highs out there would see you pretty well straight in that section there. The Dow Jones, same thing as well. So you can treat the 1530 as the 1650 on the S&P 500, and you'll be looking for support on that, but exactly same wave count here, and that's the same for the DAX as well. The FTSE is slightly different. The FTSE is very much like our market, the ASX 200. So what we're looking for here is that the 6,500 is a medium level. This pattern here would be the same as the ASX 200 as such, and what we're looking for here is we're looking for 5 waves to the downside, and I believe that because we made a new low last night through here, I believe that we're at the bottom of wave 3 here, and we'll be looking for wave 4 and wave 5. Not that it makes that much difference, because even if it was the bottom of the third here, then we would still be having an ABC correction back up through here. So if the S&P 500 does and Dow Jones do move up, then we're going to see that, of course, the DAX and the FTSE will be following a little bit, and will also follow in the ASX 200 as well. So what we're looking for is a retest of that 6,500. But the important thing here is that we do have 5 waves down through here. Okay, so that's going to give us a 3-wave counter trend at some point, and then another 5 down. So we are working in a larger A, B and C correction across here. We could also be working in a larger bear market still as well. We could also be looking at this as down for 1, back for 2 and down for 3 here. Yes, we will be shorting it at this point in here, but we don't know if this is going to be the A, the B and the C, or down for 1, back for 2 and down for 3. This is what we're sort of tracking here at the moment. So what I was thinking here at the moment is that we're close to the wave 3 here. We'll have a wave 4 and then a wave 5. That may not be completed there because we've got the strong 3rd wave down through here, the 4th and the 5th here. So anyway, that's still checking for new lows, the same as our market is as well. So coming into the CFD on the ASX 200, you know, we've been tracking 5 waves down from this high here, the 1, the 2, all the way down for the 3 and the 4 here, nice long 3rd wave through here. And the 5th wave here has been extending somewhat, so it's made it a bit tricky, because normally if the extension's in wave 3 here, then we'll be looking for wave 1 here as the normal distance for wave 5. But as you can see, it's really extended down, and the best way to count this from this wave 4 here is a little 5 waves down through to here as wave 1, back for wave 2, and then we're going all the way down for wave 3 here in 5 waves, which would be the 1, the 2, the 3, the 4 and the 5 here. Yesterday we were looking for a possible low in here, but to confirm that we needed to get support on the 4.8, and it just wasn't forthcoming. So we can, hindsight's a wonderful thing, so we can see now that we've got a 3-wave pattern there, and we're moving down through here. So what we need to do is we need to count 5 waves in this little section down through here, and that could possibly be in play now. The 4700 is a bit of trend line support there. So if you're looking for long trades here, if it's going to bounce, if the S&P 500 does move up from where it is, then you'll be looking at 4720 as support, and also 4730 at that point there. You'd trade to 4750, get out, then wait for support on 4750. If it comes, then re-enter, and then we'll be pretty much looking for a move up from that point there and the low of 5 waves. But it still does give us the same as the FTSE, the 5 waves down, so to speak. I just wanted to have a look in the bigger picture here. as such. This is the monthly chart for the ASX 200 here, and just bear with me. I just wanted to sort of explain a couple of things here, and that is that essentially we were looking for in this bear market here, we were basically we're looking for 5 waves down through here, and then we were looking for a 61.8 retracement level from this move down through here, which is up here, and we were looking for that at 5.4 there. You know, the 50%, anywhere between the 50 and the 60 is fine, and of course we're using the 5,000 there. So you know, we could possibly have that you know, this move done and dusted actually, because this move here, this counter trend will be in 3 waves, an A and a B and a C, and that's possible there. So once that's done, then we'd be looking at a 5-wave structure coming down through here, and we've been looking at this in terms of if I can just, I don't know if I can fit this in here, but this is how we count it here. This is just a line drawing, and this is across the 5,000 through here. If I can just move that across there, so that's the 5,000 there. And we've been looking for, obviously, the bear market coming down. We've been looking for an A and a B and a C to come back up through here, and I put it at 5.4 here, 61.8 retracement level, but being aware of the situation, we've come up to 55,250. So, you know, we could have this leg completed here. And I just want to explain that the options that we've got in through here, because an A wave here can be in 5 waves or 3 waves, okay? The B wave is always in 3 waves, and the C wave is always in 5 waves, okay? So that said, this becomes this B wave here. That's not so much the problem. I just want to point out where the problem sort of sits in here is in this move up through here. So if we just put this on weekly for a moment, so what we're basically looking for is an ABC correction up through here as such, 61.8%, so there, and we're looking at the B wave here in 3 waves, as B waves are always in 3 waves, so we can see that wave structure there, and then we're looking for 5 waves in this structure through here as such. Okay, now we can have the top of the 3rd there, or we can have the top of the 5th there. That's what we're trying to sort of figure out. So just cleaning this up a little bit here. The A wave that's moving up here, that's not the problem, because we can see that that's in 1, 2, 3, 4 and 5 here. That's why we knew that after an ABC pulling back to the 61.8 retracement level through here, back up through here, we're looking at it coming back 61.8%, the same as we're looking for a 61.8% retracement up that end there as well. Where the problem comes in though is that we can see that this is the A wave, the B wave and the C wave down through to here. Okay, so that's, I'm just going to clean this up a little bit. So the A wave's fine, the B wave's fine, and the C wave here. Now, C wave is always in 5 waves, okay? So this is where the problem starts to begin. And I'm just going to put it on a daily chart here. So we're looking at a C wave moving down, and the C wave should be in 5 waves, okay? Now, we can count 5 waves. We can count down to here as wave 1 and back for wave 2, and this is a strong 3rd wave through here, okay? So the question is that the 4th waves can get complicated. So I have always wondered if this whole pattern here is actually the 4th wave here. Okay, so the 4th wave here and a truncated 5th wave here. Now, it seems a little bit sort of odd to count it that way, but when I look at some of the sectors, like the XSO, they seem to, well, they all give me different readings. First of all, the 5-wave structure can be counted as 1, 2, 3 down to here, 4 to here, and then 5 to here. And in this case here, some sectors made a new low, some didn't. Okay, so that counts quite nicely to that point. And then if that's the case, then we'd be looking for 5 waves up, and we'd be looking for 5 waves up from, if I can just move this here, we'd be looking for 5 waves up here, up for wave 1 here, an A and a B and a C here for wave 2, and then 1, 2, 3, 4, 5 for the top of the third here. This would be the fourth here, and that would pull back 38.2%. So we could take the low of this here, and we can bring that up there, and there we are, pretty much at our 38.2 retracement level, which is also quite nice too, because it's the same swing distance from that high there to that low there, quite reasonably close enough, and that has a fair bit of meaning. It's a bit like looking at this swing high here to 5,000, and then the swing low through here. There was only 100 points difference in the whole thing, so it can work out quite nicely when working with it as such. So that 38.2 retracement level comes in quite sort of nicely, as does a sort of supporting trend line through here as well, coming in through these tops here as well, so the top of the channel line through here. So, you know, we are looking for support in this region here, and we are looking for 5 waves down through here. As such, we just don't know if, you know, as you know, we've been searching through here. It's just extending to the downside, so we just got to be a little bit sort of careful about that. But once that's complete there, then we should see a retest back up 61.8%. But because we've got 5 waves here, that means that we're going to get another 5 over here as well. And once again as well, we need to be careful that, you know, do we have a wave 4 here and a wave 5 to move up, or do we actually have the top in place from this whole B wave here, and we'll be working lower from here. In this case, the market only came up to 5.2 there, so this move down would be wave 1, and wave 2 coming back under the 5,000 there. It hasn't, you know, it hasn't rejected the 5,000 just yet. It's still working across there, so we'll treat it as bullish. But you know, we need to sort of keep an eye on it. The wave A coming down here normally travels sharper than the wave C coming through here. So that's one way to look at it. If this move down through here comes in play and it's sharper than this one here, then we've got a problem at that stage. So anyway, I just thought I'd sort of explain that a little bit. There's still one more possibility. If that is the top there, then the way that counts in is that this move down through here would be counted as wave 1, wave 2, wave 3. This is all of wave 4 here, and then this is 5 waves down here as a truncated 5th wave, and then we would have wave 1, wave 2, wave 3, wave 4, and wave 5 here, and then we'd have this as wave 1 down, wave 2 to go back, and then wave 3 to move down here as such, and 4 and 5 to move down. And that would kind of line up with some of the commodity indexes like the CBR as well. So there's good possibility on both sides, so we just need to stay sort of flexible. Alrighty, I've sort of yacked on about that enough there. Let's have a look at the commodities. Okay, this is the DJUBS commodity index, very much like the CRB index, and there's others of course as well. They contain all the commodities within them, and what I wanted to point out here is that this market is still trending to the downside. We've been over this before, but I'll just quickly go over it again. We're looking at 5 waves down through here, and in the third wave here we've got waves 1, 2, 3, 4, 5 here. It fits very nicely. Then we've got our retracement here, but what we're sort of looking at here a bit more importantly is this market moving down through here. So we've got basically 5 wave structure to here, and then we've got a counter trend here, and then we're looking at the next 5 waves down through to here. Okay, so but that's not the end of it, because because this structure that's moving here would be like this here. So that's a larger 5 wave. So we're basically in the third wave here. We've got down for wave 1, 2, 3 here, then we'll have 4, and then we'll have 5. So you can see that in this smaller structure here that we're in wave 4 at the moment, and you can see that this is a corrective pattern because, as I mentioned before, the first thing that we noticed here is that this move up through here and this one is fine. That could have been an impulse wave, but when this one comes back down and overlaps the top of this one here, we get overlapping wave structure. So straight away it tells us that this is corrective. Yes, it could get ugly and sideways and complicated, sort of as it is, I guess, really. But the main point here is that it is corrective, and once it's finished, then it's going to be moving further to the downside. It's sitting on 130 here, so it's basically moving into group 1 now. So yeah, look, it will bounce around a lot, but it's moving to the downside. So that's pretty much the direction of commodities as such. So yeah, that's that. So coming over and having a look at copper. With the copper here, as you know, on this 2-hour chart here, we've been looking at this structure moving down through here, and we've been treating it as a impulse wave to the downside in 5 waves. So the 1, the 2, the 3, the 4, and the 5. So we're looking at 318 here before. We've come down to 317. So we're still, yeah, look, we're just looking for the low of this to come into play through here, and then we'll see a move back. How far will it come back? I don't know. I've just gone to the extreme here. It may just, come back into the 325 here. So we'll see how it goes. The other problem is that locking under the 2 here within group 1 here, 10, 20 and 30 here, it can make it quite difficult. So we hopefully will see some sort of move up through here before we see it lock under the 320 gain. But the main point is that in the longer term, this is bearish, as is the Australian dollar as well. The Australian dollar has found support on just above the 93 and is going to rally into what we call wave 4. And then down for wave 5 in the bigger picture. So yeah, look, anyway, resources still bearish. Let's have a look at BHP in the US. So here's BHP in the US here. It's finding the sorry about that. It's sort of really fallen out of bed here last night. So it's going to place pressure on the Australian market as well with the Australian BHP here. As you know, we've got this little 5-wave structure up through here. It's the only one that's actually got it because, when you look at Rio and BHP in the US, they're all got bearish, corrective rallies through here. So maybe I'm counting this wrong here, but it certainly looks like, appears to be a 5-wave structure, and we've run with that and it seems to work out okay. And then we've been looking for the A, the B and the C here. The 62, 61.8%, 50% is sort of in here. So we're expecting it to find some support in here. You can still check lower. This market here and CBA and the banks, basically banks are looking for their 5 waves down from their current high. So the banks have got the same wave structure as the ASX 200. So as soon as we start to see the banks find support and turn, and then the BHP, then we'll see that index find support and rally from that point as well. But we have been short through here from the turn point here, even though I knew it would gap here, but we still took it. Still tracking it down, so that's all good. Yeah, the gold market is it's got a bearish bias now because we've got a clean 20-minute chart here. We've got a nice 5-wave structure to the downside through here. So we're looking for a rally, so retesting supply. So yeah, pretty much same as yesterday, even though we had an extra little drop through here. We're still looking for an A and a B and a C wave back up. 50, 60 odd percent. It's a retest of supply. This is obviously the first supply here. And if it's a very weak market, then it will move up through here, fold over through here, and then start to move down, finding the 380 as retested resistance. So you want to short at that point and add under the 72 here. If it just moves up high, then we'll look for it up here as well in terms of shorting. So we just got to chill out for a little moment through here. The lead will probably come from silver to the downside as well here. Where are we? Silver's got more of a bearish pattern, because just taking it from the 2300 up here, I have to pull this as down as wave 1 here and wave 2 to here, and then we start looking at wave 1, wave 2, and wave 3, wave 4, and wave 5 here. That's not complete because it hasn't made a new low through here either. So that's still down here, and I can see that this is interesting, because this is 5 waves here, even though it's sort of ugly, but we can see the strong third wave in here. But this move up through here appears to be in 3 waves, and this move starting here, even though it's just really small here, is looking at, if I got that on a smaller chart here, just bear with me, because that seems to be an impulse wave starting to the downside there. Nope, so we'll change that to 5 minutes. Just bear with me, because it could be a good setup here. In terms of the first, once you got an impulse wave to the downside, then we can look for a retracement. And that's sort of what we got here in a way, because from this high here, we've got down for wave 1, back for wave 2. We've got the third wave down, the fourth wave here, and the fifth wave should bring us down a bit lower into here. Once we've got that fifth wave into here, which should be, well, I can only go off wave 1 here, so wave 5 should be the same, but then we should see some sort of retracement through here. So if that occurs, and then you start to see this sort of move down here a bit further, then this is what you want here. We'll support here, and then it's retested resistance here, and you want to take that short position from that point there, working off the 65, which is group 2, 65, 72, and 80 through there. So yeah, look for that pattern. If that setup rocks in, then that's where you're looking to short from there. And silver will be leading to the downside, and the gold should follow from that point there. The oil market. Right, so we're counting this. We've got this. This will be in line with stock. So the Dow Jones and the S&P 500 need to follow that wave count to the upside. We're looking at this as an A wave, a B wave, and a C wave to here. We're looking at this being an impulse wave up. The distance above the 95 would equal the distance below. It's quite close. But this move down through here is only the first swing, so we'd need to see a little A, B, and C here, and then support on here as well. The flip side to this is Brent, and Brent, we're looking at the resistance at 105 here, and some sort of pullback through here, but it does need to find support, in the 61.8% retracement level from here as such. If it doesn't find support here and starts to test down here lower, then we know we've got a bearish situation. But it's not going to be, we can't call it in as bearish until we see, obviously, that's going to move to that point there, and then there's going to be a bounce back up, retesting supply there. And if it does end up getting lower highs like those guys there, then we'll see it move down here further. And what you'd be looking for at that point would be a move. Sorry about that. Would be a move, getting stuck up under here as such there, and failing that point there, you'd be looking at that setup through there, and from the 98 we'll probably get a retest back there and then down again as well. So I know that makes tricky, but that's the way it goes. So anyway, just keep an eye on the 100 there as well. So in this particular case, while it's the 61.8 retracement level would be down at closer to 93 there as such. So it can come to there onto this support line through here. So we just really need to give it time as well in this area here to confirm, because we want to see a larger corrective pattern across here, and then we want to see support up here. And if that's the case, then we'll retest 100 from that point. If that fails to do that, then obviously we'll be looking at a larger picture to the downside at that point. Let's have a look at FX. Okay, the US dollar. Yesterday we were looking at an ABC back for wave 4 here at 82. That's coming nicely, and we're looking at this coming down towards the 80 here for wave smaller wave 5 of wave 3 here. So Yes, look, the question yesterday was that, would we see from wave 4, would we see a clear 5 waves down uh, for the 5th wave through to here? And it does appear to be that way, but we just need to sort of be a bit mindful because as wave 4s, as I mentioned before, can get complicated. So the little A, B, C here can be just the A wave, the B wave down to here, a C wave back up through here to complete it. That's the next simple thing, then down for 1, back for 2, and then the third wave, 4th and 5th down through here. So look, either way, we have to expect to bounce off the 81 here. If that's not the case and it becomes the retested resistance, then obviously you can short from that side. And having the 81 as the retested resistance enables you to go long or add to the long positions on the euro and other crosses depending on what the correlation is. The other thing that we need to be mindful of is that, in one way or another, this is a corrective pattern. One way or another, we're going to see this be moving down through here. When it does come down to the 80 through here, obviously there's going to be some sort of support through here as well. We should see a whole series of swings through here. So that's going to reflect into the euro as well. So when we're looking at the euro, we're looking at being long in the euro from yesterday. Well, yesterday we were talking about it. So look, when that hits the 80, so to speak, then it's going to cause a lot of problems up here as well as such. Now, 130 is the top of group 1, and so is the other 3 here as well, 1, 2, and 3 here. That's the subgroup level 1 here as well. So normally what we find here is we're basically looking for 5 waves up through here as such, and we get the first high above the level. Once we've got the first high above the level, then we're looking for an A and a B and a C wave through here. Wave 4s normally break the trend channel through here, so expect that to be broken. Once that's done, then we'll be looking for the other little 5 waves to go up through here. Now, then this is probably where the US dollar is going to meet the 80, and this is at 34 here. So 34 is a Fibonacci number, so it's going to give us grief at this point here. So just be aware that there's going to be stormy weather up through here. If it's not going to be at the 34, it will be, and it extends for some headline news comment or something, then it's going to obviously be doing it at the 35. But I just want to point out the 34. Once that US dollar hits the 80, then wherever the euro is, well, then that's where it's going to sort of gravitate towards to. The interesting thing here for the Australian dollar is that we feel that the wave 3 low is coming to place now at the top of group 1 here, the bounce here. So looking at, wave 1 to here, wave 2, but probably more importantly, the 1 to here, the 2 to here, the wave 3 to here, the wave 4 to here, and then wave 5 down through to here. And the reason we think the low is in place here for is because it appears that we've got our first impulse wave to the upside, an impulse wave being 5 waves, and that's it here coming from this point here, this 1, this 2, this 3, this 4, and this 5 through here. So if we can just get a cleaner look at this here as such, then that's what we're looking for here. So we're looking for this 1, 2, 3, 4, and 5 to here now. So now what we're looking at is the ABC correction through here. So we normally, first of all, we bring this in here at the ABC correction will come in at 61.8. So we can be looking at it back into this area through here as such. So this 50-60 area through here, and also too from the 94 here, as I mentioned before, the swing stuff. So, the swing above can sort of equal the swing below through here as well. So it's not going to come that far down, but that would be the supporting area here. So that's probably the most it would come down to, the 93.72 area here. It may only do a shallow retracement level and down into the 94 here and bounce off from there as well, because an ABC retracement level, it's got two choices really, depending on the strength and the momentum of the market. One is the 38 points, so the 40% retracement level to the wave 4 of 1 lesser degree, and the other one is down at the next block of volume down through here. So it's either that one or that one in most cases. They've done tests. It doesn't, one doesn't outweigh the other one as such. So we normally just got to check on the wave count as it unfolds, but we can see that we're getting the beginnings of the A wave to the downside. If we're wrong here, then this 94.50 here, the midpoint here, that if that just moves straight up from there, then you want to be long on top of the 94.50 there. Otherwise, allow it to move into group 1, and the group 1 would be, if you just clean some of this up here, the group 1 would be the 10, 20 and 30 through here. And as you know, a market moving down into group 1 is always a bit choppy. So just, let it really mature as such. If it moves down to the 94, then comes back up and finds support on top of group 1, then you go along from that point there. But, realistically, we'd be looking at some sort of, A wave, B wave and C wave. That would be nice, and then we can start working higher from that point there as such, and working through here, building the trade at this point. But to get that nice clean 3-wave structure is kind of what we're looking for. But you need to trade what you see as it actually sort of happens. So just be a little bit sort of mindful. But this correction here has kind of got to have some sort of ratio proportion to this 5-wave structure here. So if this is 60% here, then a 40% type of correction there in terms of time and size and so forth. Alrighty, well, I think that's interesting because we've got that first 5 waves up there. That can take us up to, if that's correct, then that will take us up to, it's a retest of 95. But the wave 4 of 1 lesser degree is closer up to the 97 mark there. So anyway, we'll be doing some work on that and letting you know. But all of this move here is just classed as the 4th wave. But what it will do is it is a leader, so it could help cement the low in for the ASX 200, for banks and so forth. So it is that first initial support that we're seeing coming into the market now, even though it is a corrective move to the upside. Thanks for listening.